Arrowhead and Zurich have teamed up to offer multi-line package coverages at competitive prices. We're bringing new life to ambulance insurance. Learn more at arrowheadgrp.com/ambulance.
In this interview, Insurance Journal's Andy Simpson asked Chief Economist Steven Weisbart if low investment yields and single-digit returns are what PC insurers should expect for the foreseeable future. And what would he focus on if he were a PC CEO in 2013?
Well, I think maybe for a couple of years at the most. I think that if the economy grows as many people expect it to, then somewhere around 2015, things will begin to ease up in the sense that the Federal Reserve Board will no longer be holding interest rates lower, in the sense that the pace of borrowing, banks will be more willing to lend, the pace of borrowing will increase. We'll go from an economy that's in first or second gear into one that's in third or fourth, I think. And in that environment, inflation will begin to spark, interest rates will rise. And from an insurance company point of view, that will make an improvement in the investment environment when that happens. Of course, the stock market should also reflect some of that growth. Stocks are only about 17% or so of insurance company investments, but if they provide opportunities for capital gains, and if those gains are captured, then that'll help improve ROE and insurance operations in general. A good question. I think probably a couple of things. I'd be interested in projects that, to the degree that they can help improve the expense ratio, if we can settle claims in a more efficient, less costly fashion, if we can process information, either premium records or other things, in a cheaper way than we had in the past, that will help the combined ratio without sacrificing obligations to customers, especially claimants. I think another thing that I would, any project that has the payback of improving the expense ratio, not any project, but most projects that can significantly do that, would certainly be something I would think a CFO would want to support. In terms of other major strategic objectives, I would guess that trying to make sure that wherever they can, the rates they're charging for a risk accurately reflect the risk that they're assuming. That it's a very competitive world. They're obviously going to lose some business if they raise their rates, but I would argue that a rate is an important message to a customer. It says this is the company's view of what the risk is that you're transmitting to them when you buy their insurance. And that's an important signal. I would not want people to be misled by thinking that if the rate is improperly low, and it's my notion of proper, insufficiently low to cover the risk that's being transferred, I think that really sends a distorted message to the buyer. So I think it's important that people understand if they live in a risky area, if they have a risky property, then the proper premium for that should reflect that risk. I'd like to think that in a year from now, I'll be saying that my forecasts were exactly right, that I knew everything was going to happen. But I obviously don't know. It seems unlikely that 2013 would be another catastrophic year like the last two, simply because those 2 years were the second and third most expensive in insurance history, at least in the U.S. 2005 being the only one even worse. So I would guess it'll be a little bit better in 2013. Whether it'll be so far down that we're talking about breaking 100, been going below 100, I doubt that too, because there does seem to be evidence of an upward trend in these sorts of things. So if I had to pick a number, I'd say somewhere between 100 and 105 on an industry combined ratio. Some improvement, but nothing exceptional. One would want that, but one hates to predict it because the upward trend I just mentioned, is pretty strong and likely to show up again to some degree. We've learned some things this past year. I mean, the hurricane that hit New York and New Jersey in late October was at the most, Category 1 hurricane. When it hit most of land, it was actually a tropical storm in terms of wind speed. And yet, it caused, it looks like now, more damage than any hurricane other than Katrina, which was a 4 when it hit New Orleans and the area near Mississippi. And so our notions of hurricane strength and the amount of damage they do have been adjusted a bit, let's say. So I think our notions of what nature can do are evolving as we see these experiences happen. But I still would be reluctant to forecast another year that bad. The forecast by the climate change scientists is not so much warmer or colder or just more extreme. More droughts, more very heavy rains when it rains, which leads to flooding. And I don't know whether that's actually upon us or 100 years away. But to the degree that we are experiencing it, we have to prepare for more of that.